Well, hello everybody. Welcome to P.B.M. Money. Today could be an important day in investment. Now, I want to start by saying up front that I do not watch the market. I watch my stocks in the market. And on Thursday of this last week, we had a big drop. Almost 7%. Friday came, we lost another 2.5%. I got up this morning, Saturday, and after hours we've lost another 0.5%. 10% in 2.5 days. So the question I was asking myself Thursday afternoon, and still this morning, is are we looking at the beginning of a bear market, or are we looking at a correction? And nobody knows the answer to that. But I've been seeing signals for the last couple of weeks. Sideways trading. So let's say that the value of my stocks are $1,000, just as an example. When I say trading sideways, I mean one day it'd be 1,010, the next day it would drop to 990, then back up to 1,020, then down to 980. So at the end of the 2 weeks, my stocks were basically the same as they were 2 weeks ago, but very, very volatile. And I kept trying to figure out what is the numbers telling me? And I decided, after doing some research, I decided the market is saying, hey, there are some fundamentals that are good, some that are bad, which is normal, but in consumer inflation is now obvious. We can't lie about it. We can't call it something else. We can't say it's wholesale inflation. It's consumer inflation. And now the market has to deal with that. And they're trying to decide over the last 2 weeks, how is that going to affect the market? Now, conventional wisdom says that when you have a high inflation, you have a down market, i.e. the 1970s under Jimmy Carter. Which, by the way, how come all the liberals, whenever they talk about recessions, they have to go all the way back to the 1960s? They never talk about Jimmy Carter. I was alive during Jimmy Carter. That was a lot of heavy inflation. Interest rates were over 20% for loans. It really was that bad, but nobody wants to talk about that. Anyway, so if we acknowledge that inflation is here, and conventional wisdom says the market goes down, why is it gyrating back and forth for the last 2 weeks? I think it's a combination of things. I think the Fed, and I can't prove this because I don't have access to the information, but I believe the Fed is probably buying up more securities. There's more money being put into circulation to fight the investors trying to pull out of the market. Now, you've got that going on. Another thing that I noticed is I have, or had, some crypto coins. Now, some of those cryptos are supposed to be hedges against inflation, but yet they're dropping. So what that tells me is that the cryptocurrencies that are supposed to be a hedge against inflation aren't. Nor could they be. If you do due diligence on the crypto coins, you will see that no matter what people tell you, they are not based on value. They are not based on supply and demand. They're based on an idea. So take that out of the equation. What I see when I look at the overall market is exactly what I told you I saw 6 months ago. This is the longest bull market we've had in a while, a long, long while in history, if I remember right. So whatever goes up has to come down. It's a natural thing to have a drop in the market. The problem is, the more the Fed keeps it artificially high, when it finally does fall, the faster and harder it's going to fall. And believe it or not, the Fed has been artificially inflating the market during the Obama years, with the stimulus under Trump, and the mega spending and money influx under the Biden administration. So the market is way, way high. Now, you will hear analysts saying, no, it's reasonably priced and the fundamentals. I did a video not too long ago, and I said, I don't care what the fundamentals that they're calling are good. You look at the economy of the world and how things are running, it's here. The only reason that market hasn't fallen farther and faster is because what the government is doing is still working. Now, I watch a show called Millennial Money. I watch it every week. These guys made a point, and I think this is what another contributing factor to keeping the market up. They are telling their people that watch them that, hey, the Fed has already said they are not going to let inflation ruin the market. They're going to do whatever it takes to keep it up. So all of the investors, the millennial investors that have heard that and believe that, they're all in, because they figure even if the market crashes, they're not going to let it crash and burn. They're going to let it drop, and as soon as they can control it, they're going to put the brakes on. You know, they'll do all kinds of things, like, you know, the stock market has an automatic stop trading thing when it reaches a certain point during a day. The Fed will increase buying securities. It'll bail companies out to keep them from, they're going to do whatever it takes. Now, what does that mean? Does that mean all in on the market? Or should that mean that the fundamentals of supply and demand no longer matter? I had a conversation just the other night, and I was telling my son, it was not too many years ago that when you went into the stock market, you went into it knowing you could either win big or lose big, and you had to be prepared to lose. Well, if you take away the fear of losing your money, the people are just going to start throwing money at the market. And I think that's what's happened. That's what's happening. And eventually the fundamentals are going to take over. And when that happens, the longer they keep it inflated, the harder and faster it's going to fall. Now, I think I've explained it okay. Now the question becomes, what do we do? The same thing I said 6 months ago. Do not overreact. The problem with inflation, the problem with any economy is what people think and believe. That's a fact. If everybody thinks the banks are going to go bankrupt, guess what? We have runs on banks just like we did in the 1930s. Do not panic. This is a normal thing that happens. I would slowly pull money out of the market. And I don't mean half now and half later. I mean take 10% for the next month or two and then wait. Then another 10%. And I would put it in cash, put it on the sidelines. If you buy stocks on like Robinhood or Webull or Schwab or any of those, pull it out and set it on the side for cash. And I'm going to tell you why in a little bit. History shows that when the market does go down drastically, it usually lasts 89 days. and then it starts to slowly go back up. So over the next 90 days, continue to pull a little bit of cash out of spots where you think you're vulnerable and put it in cash. Wait 90 days and then go bargain hunting. That's how we can make money out of this. Now remember, you don't lose money until you sell. Just because your portfolio tells you you've lost 10% does not mean you've lost 10% until you sell the stock. Don't sell. And that's where we're going to get the title, Diamond or Paper. Do you have diamond hands or paper hands? If you have paper hands, you're going to fold and sell. If you have diamond hands, you're going to be tough and you're not going to sell. You're going to hold. Diamond hands, keep a level head, convert some stocks to cash, wait on the sideline for 90 days, and then go bargain hunting. Just to sum up, I don't know if this is a crash or a correction. I don't know. I got on line today, and I noticed there are already a lot of big bargains out of there. People are bailing quickly. Big bargains. Not yet. Do not go invest yet. Just be patient. Don't do anything rash. Use logic. Put it into cash and just wait. Let the market sort itself out. Let it fall. When it starts to turn up, and I don't mean for a day. I mean, if it went down for 2 days, let's see what it does for the next 2 days when the market opens. Let's wait for Monday, Tuesday, see what happens. If it goes down again, wait. If it goes up Monday and Tuesday, okay, go back in and look for bargains and buy the dip now. If you don't panic, you will come out of this with more money if you do the right things. What I just described to you is the right way to do this. The people that are stupid rich, they're just going to keep throwing money at it because they got nothing to lose. But for those of us that are everyday guys trying to make some money, we're not timing the market. That's not what we're doing. We're trying to use logic and apply it to the situation. And what I have given you is a logical response to the outside stimuli caused by the market and the government. Be patient, collect cash, wait until the market turns up, go bargain hunting. Well, that's about all I have to say. You guys have a great week, a profitable week of investing, and happy investing.